Hello everyone, it's Red with RedDragonLeo.com. It is Thursday, August the 18th, 2011. And what a huge day we had down today. It absolutely fooled a lot of people, including myself. I just did not know what was going to happen. When you go and you look at this chart here on the 30-minute and your 60-minute chart, and you see the positive divergence here, and from this histogram here trough to this histogram trough, as you can see that blue line, that positive divergence, it looked like it was ready to go up. You see you had a trend line support here, and you could draw you a line right here as well, and yeah, it was kind of in a rising wedge. But if you actually look, you see a little bottoming tail here. I know it's kind of wild swings here, okay, so I know this, but this market, you got to understand, we've never done this kind of volatility, I don't think, ever in the history of the stock market. It wasn't like this in 1929. This is worse. We are in the Great Depression too, okay? Let's get that through your heads. Before this market is all said and done, we know where it's going. 34.65 on the SPY. That's the fake print they put out. It's about 3,000 or so on the Dow. That's where it's going. That's about 346 on the SPX. So 1140, that's nothing. I don't know when it's going to get there. It might be next year, probably before 2012 is out. But you know, these gangster thugs, they want to destroy the economy, so they've done stole all the money from everybody and put America in debt. They give us the debt and the bills, and they took all the cash and they left. They're gangsters, they're thugs, they're murderers, they're rapists, they're Satan worshiping, reptilian, shape-shifting, eating, just horrible, horrible people. And so, as a human being, I hate them. As the mortal spirit, I got to try to forgive them. But you know, right now, I'm a mortal spirit trapped in this human body, and I have no sympathy for them. What the Bible talks about, beheading people in the end days, yeah, the gangsters, they're going to get beheaded by us, by the people. You know, you got rioting over there in the streets of London. It's going to come to America, folks. And I hope that these people are smart enough to go out in the country to these trillionaires, to these homes out there in the country, these mansions that they're living in, these fortresses, and they take these people down and treat them the way that they have treated us. And anyway, I'm going off on a tangent here. I'm just angry. Sorry, I get that way. I'm human. Yes, I'm not a shape-shifting reptilian. I'm human. I'm not George H. Bush or Rockefeller or George Soros or Warren Buffett or Queen Elizabeth, or the list goes on of all the shape-shifting reptilians. Anyway, in the old days, you would have looked at this and you would have seen this as bullish, because you would have seen if you had covered this part up right here and not look at the day, you would have actually seen this, and you would have seen this as bullish, as positive divergence. You would have seen the sideways trading. You would have expected it to found support here on this line and to bust up the next day. You would have looked at the daily chart, and you would have seen, as it worked its way up, you'd have said, my goodness, it's way oversold here, -40. You would have easily said, hey, this is going to rally up. It's already here. It's going to rally up, and put in a nice positive histogram tower here, maybe up to 10 or something. You would have expected this move up to be in the A wave, down here for this B wave right here, ending here, and then you'd expect the C wave to go on up to wherever, 1260 to 1300, different targets for different people. But you would have expected to have seen that in the old days when they had POMO money in there. But not anymore, folks. Not anymore. As you can clearly see, this is all they got out of the short squeeze from the bears. That's it. Ran out of steam. The B wave down, which should have ended right here, and we should have had our C wave up, that should have been, you know, helped along with the POMO money. They should have kick-started it by kicking it in and squeezed the bears and caused a rally. Not anymore. You can see we had a huge, huge sell-off. So I did not see this coming. I did not participate in this move down. It's very frustrating. Yes, it is. But I just didn't know, what to think at that point. We were, at this point, when this was here, I did not know how far this was going to go up. Sure, we came from negative 30 all the way up here to about positive 10, but it looked like we were kind of curling back up. We had a very low histogram tower here, and in the old days, the last 2 to 3 years when they've had POMO money in there, when you see a huge histogram tower like this all the way up here 7.5, it rarely just tanks again. I mean, it just never did it in the past. It would go down, do what this did right here, barely dip below zero, then it would come up here and put in a lower high on the histogram tower and roll over it. While it was doing that, it would make new highs. It would have found this support line and rallied on up and hit 1260 to 1300, that resistance zone. Did not happen. They literally just ran out of money, and it just gapped right down, broke that level, and gapped right down, and just rode this trend line here all the way down. So you got to think of things differently now. You cannot think that they're the same as the old days. The POMO money is gone. Things are different. They are letting this market collapse. It is all planned. They've stolen all the money, and they're leaving us with the debt, and they're just going to wipe us out with these crashes. And it's just going to continue all the way through into probably next year, when they finally bottom it out. Of course, there's going to be bounces along the way, but they're just not going to be what you're used to expecting. So at this point, it looks to me like we're starting wave 1 down. I'm sorry, wave 5 down, this whole move. Obviously we got to take out this 1100 low here, but if we take that out tomorrow, then we're dropping. We should go at least to 1077 on the ES, because that's where we had a after hours low back on I don't know if it's this day or this day, one of these days here. We had an after hours low of 1077 on the ES, so we should at least go to that level tomorrow if this thing continues down. Now, in the old days, you would argue that after a big distribution day like today, you would say it'd be a pause day tomorrow and close slightly positive, meaning it'd be kind of a doji day like this, a spinning top kind of pattern. That would make sense most of the time after every huge down day in the past. Now, this is a huge down day, folks. These are crashes. There are many crashes. They really are. But we're getting so accustomed to 500-point down days, you don't even call them a crash anymore. But they are. They're crashes. You look back here at days like this, and you look at this day here, and that was probably only maybe 300 points or 30 points or something maybe on the SPX, which was a huge move back then. You see that, and the very next day, what do you see? You see a white candle up, retrace 50% of the move or better, and that was typical. Then it continued more selling. So tomorrow argues that if it's like the past, we should go up here and retrace 50% of this. But guess what? It's not like the past. Things have changed. This thing already worked off all of the oversold conditions, went up here as high as it could reach, then it ran out of steam, and it's now headed back down. So at this point, we should put in our lower, or I should say our higher low on the histogram towers to allow a positive divergence. But at the same time, the market should actually go down lower and take out the 1100 low and complete this fifth wave down. It should happen tomorrow. If things are doing exactly what they have been ever since this POMO money is gone, then I am not expecting a positive close tomorrow like most people are expecting. And I know a lot of people are. Cobra's said that, the 88% chance of a positive close tomorrow. But, that was back in the days when we had POMO. And, again, things have changed. So I can't think that that's going to continue. I just, at this point, everything is bearish. And you can see that's still curling over, going down. To me, I would not be surprised if it just flat out crashed again tomorrow, took out the 1100 and kept on going. And then, of course, I expect a higher low here on this to set up a positive divergence and end this first major wave 1 down. If you want to call it that, I don't care. You call it whatever you want. Elliott wave, people call them different waves, but for simplicity, I'm just calling it the whole move down from here all the way down to here, wherever it ends, as a major wave 1. So that's, you know, really what I'm seeing. I'm not seeing your typical pause day tomorrow. This has already worked its way up here, almost to 50, rolled over. This here's rolled back down. I see one more exhaustion bar move even higher. You see here how we had 1, 2, 3 even higher. I think we're going to get another one tomorrow just like that. I think we're going to get a flush out tomorrow, finally get our capitulation move. Then next week we can move up into Ben Bernanke's Jackson Hole speech on Friday. You know, I said earlier in the week, in the weekend video, that this week should have been a positive week, closing positive, based upon past history, based upon the bottoming tail right here you've seen, based upon the 200-week moving average coming in at 1154, and the bottoming tail. I said in the past, this is a clear sign the market at bottom. We should close positive the next week, much like we did here off the flash crash. We closed positive the next week. Okay, and this is typical to happen during OPEC's options expiration. I originally said in the video I thought that we would go down on Monday and Tuesday and come back up on Friday, but there was still a possibility it would close negative. Well, it did the opposite. We went up on Monday and Tuesday, and Wednesday we traded sideways, and we finally went down here on Thursday and Friday. It looks to me like they're going to close it down below this. So if things go as they have been, then we should continue with the crashing tomorrow and drop another 500 plus points or not, or more. If not, if I'm wrong on that and they do kick in some POMO to save the market, then they should close it right here above the 200 moving average at 1154, close the day positive, or close the week out. Well, the week won't be closed positive, but the day will be closed positive if that happens. I just don't feel like it's going to yet. We don't even have a positive divergence on this yet. We're still going down. You've got a lower histogram tower here than this one. We're still going down. We don't have no positive divergence. There's nowhere near bottoming. This thing is going to run all the way down into here to negative 100, negative 125 before it's all said and done. Now, is this going to curl back up and come back up? Yeah, probably. I think that's going to happen in September. I think we're going to have her bounce in September all the way into the Legatus pilgrimage. And that's going to take us into October. And I think by October the 23rd, that week, I think we are going to peak out here. And you could probably draw a line right here. And literally, you will probably curl right back up, hit that line. And then on that week, we will start the real crash down again. So that would basically allow this to briefly try to curl back up a little bit. But I don't know if it's going to put in a positive divergence or not. It could. If it started to curl back up and then crashed again, and maybe it puts a positive divergence in. We'll have to take it, you know, one day at a time on that. But look here at the RSI. It's at 31. That means 31% of the relative strength goes to the bulls, and 69% of it goes to the bears. The bears are pushing this market down at a 2-to-1 ratio. It is really, really putting pressure on the weekly chart. And the monthly is not much different. Monthly, same thing. It has crossed 50. It's at 45.48. It is putting a lot of pressure down. I would not be surprised to see this month close out. I think we could actually pierce this, go down here below this, and maybe they try to recover it for the end of the month and close it right there at that 1102 on the 200-day moving average. Maybe the last week of August they try to pump it back up and close it right on that. That's a possibility. I'm just guessing with that because that's a monthly close. But you can see this thing is just headed for disaster. So if they do that, then you might expect September to move up a little bit, try to recapture these lines, and then October to really, really be the most horrible month of all. You can see it's just getting started here on this. So, I was reading Cobra's stuff here. VIX rose more 24%. Buy to close, sell tomorrow. You got 88% chance for the last 2,000 trading days. Well, last 2,000 trading days are what, 365 divided times 5. I don't know, what is that, 7 years or something like that, 6 or 7 years. you know, a lot of that was bull market territory in the last 7 years. So I really think this time is different. I know 44% out of 68 times, 65% of green day the next day after major distribution, but that's not the case. That's not the case here recently. As you can see, you had this 1, 2, 3 red bars here. When the first one was here, you had a lower one, and then you had another one. I mean, so you only had the positive one here, I guess, on this positive day right here. So you had 3 in a row of major distribution. So things have changed, and I think that it's going to be one of those occasions where it's going to be the low percentage, 65%. I think we're going to have the 35% chance that it's going to close negative tomorrow hugely. I really think that. So, and don't get me wrong, I respect Cobra completely. He's a very, very good chartist. You only go by these statistics, past statistics. But things have changed now. Things have really changed. And the VIX, I haven't even refreshed the page yet for the VIX, as you can see. So let's refresh it, and you'll see what the bar looks like today. It is going to, you know, blow your mind. Look at that. Now, you can call that a topping tail if you want, but generally speaking, what happens is you have a lower high here on the histogram bars, putting in a negative divergence as the VIX puts in a higher high than this 48. So I would not be surprised to see it continue on up tomorrow and literally take out the 48 and put in another bar here, but still be lower than this. That would put in your negative divergence here as the VIX goes higher and the market goes lower, and that would allow for next week for some type of rally from the wave 1. Same thing here, as you can see, the VIX went down here and bottomed in this area, -1, traded sideways. You think it's kind of ready to fall back down, ready to curl back down, and you'd think it would be ready to dip down here again, but no, it didn't. Let's refresh the page, and you'll be able to see the difference as we refresh the page. Huge difference. Just absolutely tricked a lot of people. It did not want to stay down. It was up here at +4, went down to -1, traded sideways, found a base, and just shot up. That's just the opposite for the market, as you can see. So it just so yeah, it's overbought, it's overheated, but don't be surprised if you see more. Look here at the ADX. The ADX on the 60-minute, this thing could run right back on up here to 60 again, and keep this positive DI line for the VIX up high. This could take it out again. So, you know, so now that I have been officially tricked and missed out on this move because I thought that was it, we was going to just kind of chop around. I really didn't know how high we was going to go, but I thought it was going to chop around to the end of the week on the market, and you know, maybe close up here somewhere, 50% level or something like that before it goes into next week. It just didn't occur to me that this support line will not hold. But with no POMO money, they just the jobs data and all the other news that came out, it was just negative, and they just sold. They just let it fall through. So this is a key, folks, to tell you that you've got to throw out the old thinking that you're going to get major, huge rallies. You're not. Now, when this wave 5 is finished, yeah, you can expect a decent rally, but don't expect it to be up like it used to be. There's no POMO money there. So if we get a 50% rally from wherever this falls to and ends, let's say it just hits 1077 and quits, and then you take it back, you know, up here to 1347. So 1077 minus 1347 is what? 370 points. So half of that is let's see, 200 and or no, I'm sorry, 185. So 185 points up from 1077. Phew, testing my math skills here. Is what 11? Let's see. Oh shoot, I'm getting tired. Can I cheat? You mind if I cheat? What is that? 1077 plus 185. Okay, 1262. That's 50% rally. So, you know, you get the idea. I I'm just not expecting some huge rally even after this wave 5 is finished, is what I'm trying to tell you. So they have admitted they're taking the POMO out, and so whatever Bernanke says, I don't think it's going to be positive. I really don't. So, and I'm not saying 1077 is a low tomorrow. If we get panic capitulation, then you could see it drop even further. There's no way of knowing. Let me see here on the weekly what I would say. Okay, on the weekly, right here, about 1,000. If you really want panic selling, about 1,000. And if it really gets panic, you'd pierce it. You'd pierce it. And where would it go? Maybe, I don't know, 20, 30 points below that on a pierce would be an estimate, and then that would be a bottom. That'd be a good bottom for a while until they ran it right back up, probably to that 200-day moving average or something would be a good spot. So, and that might take a few weeks. If that happens, that actually might take us all the way into October. Might be choppy into October. I just don't know. But we got to take that one day at a time. But for now, I'll just simply say that odds, and the old odds used to say we'd have a positive close tomorrow. As far as I'm concerned, what I can see, the new odds say that it's going to be a negative close. That we'll probably have our capitulation day tomorrow. So that's just what I'm seeing in the charts. Gap it down below here. If you gap it down below 1101 right at the open, I know that's a lot to ask for, but if you do, I mean, look out. It's just going to fall like a rock. There's so many. Actually, you wouldn't even have to gap it down below that low. I'd say here, here, and here. This area right in here, 11, 18, 19. Probably right below that in the 11, 10 area, I'd say there's probably a lot of people put their stops in there. A lot of people put their stops in there. People that seen a triple bottom and they finally went long on it, there's a lot of stops in there for the bulls now. All you got to do is gap it below that, and don't think you can't do that. You gap it below that and it drops like a rock. So just food for thought, folks. That's just what I see. Right now, I've got to rethink my thinking because I got fooled on this. Again, like I said, in the old days, this would have been a bull flag and it found support and would have went up, but not today. Things are different. So good luck, everyone. If you're trying to play the long side on this, good luck. I mean, hey, I was wrong this last call, so I could be wrong totally on this, and we could rally tomorrow. But my gut tells me, and everything else points to more selling tomorrow, more crashing tomorrow. So good luck to you if you're long. And that is it, guys. Thanks a lot. Over and out.